Welcome to the deep dive. Today we're taking a closer look at Archer Aviation. That's ticker ACHR.
Right, the electric vertical takeoff and landing, or eVTOL aircraft maker.
Exactly. And we're basing this dive on a recent piece from the Motley Fool.
Okay, and for everyone listening, think of this as your mission, if you will. Should you consider investing in Archer, especially with earnings coming up May 8th?
Right. Let's see if we can unpack that. So Archer,
Yeah.
their path hasn't been totally straightforward, has it? They went public, what was it, September 2021?
Yeah, through a SPAC merger. You know, the typical route for some of these newer tech companies.
And a SPAC, just quickly, is that shell company that merges to take a private one public faster? It sounds like Archer maybe hit some turbulence early on with investors.
Well, yeah, that's pretty common with SPACs. You get the initial buzz,
Yeah.
then the market kind of steps back and says, okay, show us the goods, prove the tech works, prove you can actually build it.
So the initial skepticism was maybe about execution.
I think so. Investors were likely waiting for tangible progress, moving beyond just the concept phase.
But the stock's picked up recently.
It has, yeah, which suggests maybe confidence is building that they're hitting those key milestones now.
Okay, so let's talk about what they're actually building. The main aircraft is the Midnight.
That's the one.
What are the key details, like capacity, range, speed?
Okay, so the Midnight is set up for 1 pilot and 4 passengers.
1 and 4. Got it.
Range is up to 100 miles on a charge, which is pretty decent. And top speed, they're saying 150 miles per hour.
And how are they positioning this? Is it just a fancy helicopter replacement?
Well, sort of, but the key pitch is greener and crucially cheaper than traditional helicopters, especially suited for buzzing around cities.
Right, the 100-mile range on battery. That's not trivial tech, is it?
No, not at all. It points to real advances in battery density and motor efficiency, things they've clearly been working hard on, even if the exact secret sauce is, proprietary.
Greener and cheaper. Okay, that makes sense for urban areas.
Yeah.
How does this fit into their bigger vision?
Well, the goal is really about creating efficient, sustainable transport within cities, getting over the traffic jams.
Because helicopters are just too noisy and expensive for everyday use.
Exactly. eVTOLs like Midnight are designed specifically to overcome those hurdles.
And they don't just want to build these things, they want to run their own air taxi service, aiming for uber black prices in, 2 years?
Yeah, that's the plan. It's ambitious, for sure.
Very ambitious.
But it shows they're thinking end-to-end, right? Not just manufacturing, but operating within this whole new urban air mobility market. Getting price parity with a premium service like Uber Black would be, a game changer for adoption.
Okay, but vision needs backing. Partnerships, orders. That's critical, especially when it costs so much to build aircraft. They seem active here. United Airlines ordered 200.
Oh, absolutely. An order that size from someone like United is, it's huge. It's not just potential money down the line. It's massive validation.
Signals real market demand.
Definitely. It tells the market, hey, a major player believes this technology and this company have legs.
And it's not just United. Stellantis, the car giant. They've invested and are the exclusive manufacturer.
Right, and that's really interesting. Stellantis brings that automotive scale, obviously, but what's maybe even more insightful is their experience with mass production quality control, supply chains.
Things that are super critical in aviation.
Exactly. Maybe even more critical. Their know-how could seriously smooth Archer's path to getting certified and actually building these things reliably and at scale. Think about car manufacturing discipline, applying that to eVTOLs. That's smart.
Okay, interesting angle. Then there's government interest DoD contracts up to $142 million.
Yep, another big validator. And it's likely non-dilutive funding, which is always good.
Even if the first plane delivered was just for testing, not revenue.
Right. That's typical for these kinds of defense development contracts.
Yeah.
But it puts their tech through rigorous testing, builds credibility. It's like a stamp of approval that commercial customers notice too.
And it seems the interest goes beyond the U.S. The article mentions Future Flight Global, Soar in Japan with JAL Ethiopian Airlines.
Yeah, it really highlights that this isn't just a U.S. thing. The potential for eVTOLs seems global, whether it's city transport in developed places or maybe connecting remote areas elsewhere. That diversity of interest is a really good sign.
Okay, one more partnership. Palantir. Using their Foundry platform, AI. What's the specific benefit there?
Well, Palantir's all about data integration and analysis, right? So for Archer, it's not just tracking production parts. It's using data to optimize the whole assembly line, maybe spot quality issues before they happen, analyze flight data for performance tweaks.
So using data smarts across the board, from factory floor to flight system.
Basically, yeah. Leveraging data intelligence for efficiency and safety.
All right, vision, partnerships, looks promising. But let's talk money, or lack thereof for now. 2024 revenue, 0. Big net loss. That's expected at this stage, though, right?
Oh, absolutely.
Yeah.
Totally normal for a pre-revenue company deep in R&D and setting up manufacturing. Building planes costs a fortune up front. The fact the first USAF plane didn't bring in cash fits that perfectly. It was for evaluation.
But the first paying customer delivery is pegged for end of 2025, Abu Dhabi Aviation.
That's what the article suggests, and yeah, that's a huge milestone. It's the switch from development to actual commercial operation. First, real proof point for the business model. Investors will be watching that one like hawks.
And analysts seem to see revenue ramping up, like $29 million in 2025, jumping to over $470 million by 2027. Those are some big leaps.
They're substantial leaps, yeah. That optimism seems based on Archer's own production goals, which are quite ambitious.
What are those targets?
They're aiming for 10 aircraft in 2025, then ramping up pretty quickly. 48 in 26, 252 in 27, and then 650 in 2028.
Wow, okay. 10 to 650 in 4 years.
Ambitious, like I said. But it's backed by that growing order book we talked about. Their plans for the air taxi service, and importantly, they had over $1 billion in liquidity at the end of 24. So that they have the cash runway, supposedly.
Still, going from 0 paying deliveries to hundreds, that's a massive manufacturing scale-up. What are the big hurdles? Certification, infrastructure?
All of the above. Getting the final FAA certification on time is absolutely number one. Then, smoothly scaling production without hiccups? That's tough for any new aircraft maker.
Yeah.
Plus, you need places for these things to land, right? Vertiports. And people need to actually feel comfortable using them.
Do analyst projections usually factor in potential delays?
They try to, based on company guidance and industry history. But yeah, unforeseen delays in certification, manufacturing, or even building out the infrastructure could definitely push those timelines.
Okay, let's pivot to valuation. Market cap, currently around $3.8 billion. The article says it's trading at about 8 times estimated 2027 sales. How does that stack up?
Well, if you compare it to Joby Aviation, a key competitor, Joby's market cap is a bit higher, maybe $4.7 billion, but they're trading at a much steeper multiple of their estimated 2027 revenue, something like 25 times.
8 times versus 25 times. That's a pretty big difference.
It is. Based purely on those future sales estimates, you could argue Archer looks, perhaps, undervalued relative to Joby.
Why the gap, do you think? Does the market see Joby as further ahead somehow? Maybe on certification track? Or tech?
Could be several things. Market perception about who's leading technologically, or who's closer to getting that all-important regulatory green light, confidence of the management teams, their specific strategies. It all plays in.
And the article mentioned insider trading activity.
Yeah, that was interesting. Apparently, Archer insiders bought way more stock than they sold in the last year. For Joby, insiders apparently sold more than they bought.
Which the market might read as?
Well, you have to be careful with insider signals. But generally, significant insider buying is seen as positive. Suggests management believes the stock is undervalued or has strong future prospects. Vice versa for selling, though there can be many reasons for insiders to sell.
So it adds another layer to the valuation comparison, suggesting maybe Archer's own team is more bullish.
It certainly provides some interesting context.
Okay, so the Motley Fool piece argues there might be a reason to consider buying before the May 8th earnings. A key part of that argument seems to be about tariffs.
Right. Tariffs and trade war concerns. Apparently, Archer mentioned in their 10K filing, that's their big annual report.
Right, the detailed one for the SEC.
Exactly. They flagged potential issues with sourcing parts and ramping up production if tariffs got worse. So that uncertainty might be weighing on the stock price.
But things might be looking up on that front.
Potentially.
Yeah.
The article notes the recent pause on most new tariffs and, the ongoing possibility of some kind of trade deal with China. If those tariff worries ease, it could remove a drag on Archer.
So the idea is, if the May 8th earnings call includes positive news on the tariff front, or less worry about the supply chain because of it, that could boost the stock.
That seems to be the argument, yeah.
Yeah.
If management sounds more confident about their supply chain and production costs because the tariff situation looks better, the market might breathe a sigh of relief and reevaluate the stock upwards. It could be an inflection point.
Okay, let's try to wrap this up. Our deep dive, based on the full article, paints Archer as a company with, well, definitely long-term potential in this new eVTOL market.
Significant potential.
They've got impressive partnerships, big orders on the books.
United, Stellantis, DoD.
Yeah. Ambitious production goals, but seemingly the cash to chase them, for now at least, and the valuation, maybe looks reasonable, even a bit low compared to Joby.
Especially if those tariff concerns fade. Yeah, that seems to be the near-term catalyst angle.
But, and this is crucial for listeners, it's still speculative, right? This is an early stage industry.
Absolutely critical point. Highly speculative. The eVTOL space is exciting, but there are huge hurdles. Technology, regulation, market adoption. Success is definitely not guaranteed for any player yet.
Final approvals, tech challenges popping up, new competitors, whether people actually use these things. Lots of variables.
Precisely. So while the article points to positives, the risks are very real.
Okay, so maybe the final thought for our listeners to chew on is this. Look beyond just Archer. Think about the whole eVTOL industry taking shape. How will things like regulations evolving, or the slow build-out of vertiports, or just general public acceptance? How will those wider factors impact everyone in this space, including Archer?
That's a great point. It's not just about one company's success. It's about whether the entire ecosystem manages to lift off successfully. Lots to think about there.